Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 12th of February, 2026, about 6:35 p.m. Central Time. Well, meltdown day in the stock market again. It matters not what part of AI you're in. They've gone into breaking on the software part of the company or companies that use them. I'm really not seeing that in NVIDIA. I'm not seeing it on the big chip companies at all. But Apple today just stands out as one of the biggest breaks we've had in a long time in it. They're not in that business, but they couldn't withstand it. If anything, they're using a third party, but they did get some bad news. They had a committee out of Congress taking a look. I think it's FTC or that, as to why their posts always lean to their political thinking. Then we're getting other news that the chip maker that they're going to put in with the new AI is falling behind and on the programming, so that won't quite be the way that it was, and this is the second delay on it. So those two things weighed on that today. You broke $2 in the crude. All that we had to hear President Trump say was that the meeting went well with Bibi, that's Netanyahu out of Israel. However, when asked and pressed by reporters today in the press conference, and I saw the conference, he said, Iran had better do it. They're not going to like the consequences. They're going to be immense. You know what we can do. And then the reporter pressed him, well, when are you giving them till? He says, well, it could take a month to get this all worked out. I think we're all surprised at that. I am. I thought he was ready after meeting with Israel to be more aggressive instead of less. So they either don't have the military where they want it to be, or they think that maybe they can get something done with Iran. I think it's got to be the first part that I say. Bonds and notes, as the stock market waned, they got the bids all day long. You can't possibly say to me that they're getting a bid for any other reason. It had to be the melt-off scared the market. Maybe we should, before I go here, cover with you what they're looking for tomorrow. We're looking for the CPI to be up 0.3% month over month, and that's where you're sitting. And in annualized terms, up 2.5% from the year ago month. And as I said, the meltdown in the stock market taking place, and those are the things that I'm looking at. This is the first time since November that we have seen a break in prices on a weekly basis that has carried the market back to the 18-week moving average of closes. So the weakness has set in, and the market has left a top of sorts up there. When we take a look at the chart here, you can't see it as good as you do on that chart, but this is the top of sorts that's left, and the market has been breaking down. The pattern is one on the swing line. You've got a lower low and a higher high, nothing really happening there. But what did happen, well, actually, I take that back. You have actually lower highs and a lower low. That doesn't belong there, not at all. I've got that wrong. Sorry about that. You have the lower highs, lower low, which is a downtrend. Today, you cracked underneath that 18-day average. Haven't done that in a while to get this set up that way. And you didn't even hold the 100-day average. So if you want to let go, what's the next support that's closest? The Bollinger Band at 68.35. And if that let go, 200 points lower, the 200-day average. I'm not saying it's going that far, but the Bollinger Band certainly in play. And you have momentum pointing down. So this market's bearish. Lower highs, lower lows. Under the 18-day average, bias down, momentum pointing down. I think it gets sold on the rallies now. NASDAQ the same. The NASDAQ had another event. The 18-day average in red is now under the 100-day average. Wow, the 200 is over here. Not good looking. Lower highs, lower lows, Bollinger Band very much in play. The Dow is the only one that you might see some buying in at the 18-day average in the 49.53 zone, but you probably got to risk a pretty good amount of money here, probably close to, I don't know, it's going to be close to about 200, 300 points in the market minimum. The Russell, higher highs, lower lows, it's not trending at all. So it gave everything back today. In the DAX, early on, the market rallied up to the Bollinger Band, looking strong as can be, and then turned around as everything around it started coming apart. So this wasn't just a U.S. event today. It's spread around pretty darn good. Bonds and notes, they don't know what's going on. When we take a look, this is the 10-year. I know I forgot to do that from yesterday. The 10-year note up, the 2-year not up as much. So the 210 losing a little bit of its grip here. The dollar index, as you can see, trying to get some footing. We'll see what it can do. It was up today a meager 11 points. That's like unchanged on the day. If this market takes up 96.37, I think it's on its way to the lower Bollinger Band. And if you could take out in this market up here, that high, then I think you're up to the upper band. But if you take out 118.51.5, you go down in this market. So you got to be watching very carefully what they do. In the Japanese yen, I'm looking for resistance right here up to the upper Bollinger Band, and you have an overbought market. In Bitcoin, you have a meltdown going on here. The market's not embedded. It's very oversold, so it's hard to get short, but it just keeps letting go, and there's absolutely been no verve to the upside. Even the bulls are now starting to talk. Maybe it has to go to 50,000 in order to find more support. I don't know. Is that bottom talk? It could be. When you get to the Brent, you broke apart today and went right back to that 18-day average, and the same right here. So as soon as the president gave the go-ahead that there's nothing going to happen this weekend, and maybe not for a couple of weeks, well, all of a sudden the war premium in the energies, bing, you burst the bubble and they come apart. And you're seeing that in the heating oil as well. Natural gas is not part of that story. It's still very much in a bear market. So that's pretty much what I'm seeing in them. Easy to trade, probably one of the more difficult markets I've viewed in a long time. So be careful. It's just not, you're not getting follow-throughs. You get big moves right away, and then they sort of run out of steam in most cases. The one that's holding and that's hurting is that AI move, is it's taking market upon market and sector upon sector with it, and that means the stock indices are in a difficult place. I'm Ira Epstein. I'll catch up with you all in the other videos tonight, and first thing in the morning update. You have a great evening.